Ajay Srivastava joins us now. Let's connect with him. Summer is over and it is monsoon. So is it time now to change your strategy also, now that the season has changed from summer to monsoon? Hello, sir. Good morning.
Good morning. How are you doing, sir?
All well, sir. Nobody is complaining in this kind of a market. But if somebody is not booking profits, is it a good idea?
Well, you said nobody's complaining. Ask the investor who was holding the stock in SRF, what does he feel like at the end of 6 months? So the market went up. So, while yes, there is a lot of euphoria, but I think stock specific, there has been a little bit of a problem for many stocks in the chemical sector, etc. So I think people who run the indices or actually did mutual fund this time came out winners than the stock pickers because a lot of the stocks didn't really perform in the rally, and the laggards who everybody left behind were the ones which kicked in. So I think it's a great thing. The old favorites, they got retired this year, whether you look at Page Industries, SRF, etc., and the newer stalwarts like Dream Folks, etc., came into play. So I think it's a great thing. Not that the market has gone up, but the new themes, the new companies are coming into play. And I think that shows the vigor of of the country or the economy, to the extent that so many new theme in the market. Why waste time with the old guys? I think it's done and dusted. They may come back again, but the point is, I think more than the important is so many new players in the market. The choices have burgeoned like nobody's business, and it's become tough now to sit all night and read the results.
What are you doing in this market apart from playing golf and enjoying your Saturday night couple of drinks?
I tell you honestly, we moved to cash quite a bit now. We are almost 30% plus in cash at this point of time. And, we'll wait. We'll wait to see what happens to the market. So we've been happy with booking profits. We've been taking off weaker stocks off the table, focusing on a few select names and keeping them there. And we will wait and see what happens to this market, because eventually there is still, we can see all the buoyancy, global buoyancy in stocks. In India, and let's focus on India, there is still a big disconnect with what the fundamentals are, what the companies are reporting, and the P expansion that has happened in them. I can't see any result. And the stellar result, let's say banking. If you see ICICI Bank, the profits on retail banking, wholesale banking, notably dropped in the June quarter compared to the March quarter. Yes, there is seasonality of March quarter, but still you had a degrowth in profits of these two main segments of the banking industry. Now that tells you a story of the market which is unfolding on the fundamental side. So you can ride the euphoria, but you can't fight the fundamental in the end.
Okay, that's interesting. Ajay, I want to come to maybe those specific stocks that you said you're sitting on. But first up, let me get in your thoughts on ITC. It's been the stock of the week, perhaps, given the fact that it's perhaps a case of buy the rumor, sell the news that pretty much played out. What's your view on how the demerger of the hotel business has shaped up?
See, I think it is a great move, but it's a very marginal move in the sense that it doesn't really move the needle for an ITC investor. At the best, the market cap could be about 25,000 crore, which is less than 10% of the ITC's market cap. So I don't think it's supposed to move the needle. I think what the market got a little spooked was just keeping this 40%. We were all anticipating a complete demerger. Now the company is separate management, separate this thing. I think what unnerved the market and doesn't confuses the market is, why do you want to keep 40%? Let the shareholders have their direct equity holding directly in the hotel, and the hotel company works itself out, raises equity, debt, etc. Now what they have done, really speaking, what they've done is that this hotel company becomes an adjunct to ITC, controlled by ITC, cannot raise equity because it's unlikely ITC will dilute their equity holding, and a 40% being associated, the results also come along with this one. So in a sense, it raised expectation of a demerger, but did not do it. And I think that gets a pointer that somehow in the ITC management, that control phenomenon, I must control this, still remains. And therefore, what is unnerving is, why do you want to control this hotel company? Now, who's going to fund this hotel company? As Indian hotels did an issue, etc., preferential issue. Now, that is not going to be possible in ITC hotel. So I think they shut the growth windows, kept the control, and put the modicum of demerger onto it. So I think it's very disappointing for the shareholder. Not that it will move the needle very much, but I think the significant pointer was demerge completely. So we have a strong cash flow business we can own separately, and a hotel we own separately. That's not happened now at this point of time. This control, I tell you, this Indian management's, this concept of control sometimes just kind of frustrates you as to what's the problem, man. Just run your company. There's enough to be done in ITC than to worry about hotels.
Okay, so that's the view coming in on ITC. Perhaps a different structure is what Ajay is suggesting. But Ajay, is power theme something that you would like to bet on? We are seeing there are various ways to do that, whether in terms of generating companies like SJVN, NHPC, NTPC, etc., financiers the likes of REC, PFC, and of course, then the users, durables, Polycab, etc. What's your view?
Hang me for generational company. I tried, burnt my hand. I'll be honest, like all good things, we should be honest to the market, that we tried our hand with it, that we are very bullish on power generation. India is going to be great. Consumption will go up. Market pricing will become free. Nothing happened at the end of the day. The companies are sluggish. They are non-performers. ITC stock, you can take it. Compared to what the market is, it's a dog, absolute dog, and it doesn't go for them. Whether startup power, Adani power, you just name the power companies. So generation companies and an election year, unlikely for them to get any relief in terms of passing on tariff to the consumer, etc., etc. So I think power generation companies, I think, should be left alone at this point of time. I don't know what is the trigger for them at this point. Highest interest rate, generation requirement is, power requirement is much lower in the economy this point of time. Government is not going to let you pass through so much of it. So I don't know, is there a trigger for them? I doubt it. I think we burnt our hands of very poor returns or maybe negative returns on some of them, and we won't touch it again for next at least 2 years till the elections are over. Now, come back to the point, we talk of Polycab, etc. I think these are specific stock stories. These are not industry stories, because I think he's built up the portfolio on exports more than domestic. So I think, there was a strategic compulsion in the company to go beyond domestic, and it's paid off very well. So, it's not an industry symptomatic. It's a very company-driven strategy which came out well. I'm not sure it will come across all the companies in the industry, but certainly to extent that degrowth that we see in most companies, that won't happen. Whether you need to buy at these prices, valuation, I would doubt very much, except after yesterday's China news, perhaps it's some more good news for companies like Polycab. But, it's going to be difficult for them to replicate these kind of returns of a strategy which paid off so beautifully in this quarter.
Ajay, for the first half of this year, the typical growth names have made a comeback. That's been the global experience. Whether it is chip, AI, internet companies, Paytm here, followed by Zomato. Second half, time to ride growth or time to look at value? Because interest rates have peaked out. Inflation is coming back. Crude has popped up. So is it time to now look at the other side of the spectrum?
See, the problem is, where do you search for value? Everything is so expensive. You just give me 5 names. I would ask you to give me 5 names who you would think is today value stock. Very difficult to find quote unquote value stocks. But I still believe, stick to the themes, I think, and that's the more important one. You got to have your convictions, stick to themes more than stocks. And I think what you named, some of the online stocks, some of the stocks that relates to, we spoke about the launch company, which I am holding in. These are newer themes, emerging defense themes have done extremely well in the market in the last 2 years and continue to perform very well because of scarcity. So I would still say, stick to the themes, stick to stock specific. Yeah, and you got good quality groups, like for instance, South-based group, which has got an automobile, which has got an e-mobility, which has got an infrastructure. Why don't you put your money behind them? And because they are doing a very smart job of 2 decades, 3 decades of generating shareholder value. So I would still say, don't look at value, look at highest performing industrial groups, what they have done, continue to back with them. Don't worry about it, that they've gone up so much, because they will go up a lot more as India expands. Inflation will take it up by 6 to 8% year on year, so not to worry about that. So I am not of the view that one should change a strategy at this point of time, but I think you need to prune your portfolio down and back the winners. You saw how well a very large, let's say Poonawalla FinCorp, how well it has performed since it's taken over by a guy who's performed so well in, Serum. So, when you back a promoter with a given track record, I think you are in a much safer hand. Same happened with what happened in the hospital, Max Hospital. So I would say this is the time, back your theme, back your conviction. Don't need to buy everything at one day, but keep a watch list, keep adding up to your portfolios. Don't prune the good ones because the market has gone up. Prune the bad one, the one results are bad, potentials are bad. And P's are not crazy. As we discussed, some of the retail P's, for instance, why would you buy a company which is degrowing at a P of 150? Now, somebody's buying it, market is saying it, but it's nutcase value, nutcase investment, I call it, thesis in this country. There's some of the stocks that don't grow are running at P's of 100 plus. 100 plus P's, Google doesn't get it, Apple doesn't get it. And we give it to retail companies in India. It's crazy.
I think he's referring to perhaps a business which is backed by Radhakishan Damani, and it's a business which is contracting given what's happening to value retail in India per se. So Ajay, for the moment, if you have to, let's say, look at the most overrated sector and the most underrated sector, which one would that be?
I think the most overrated sector too is retailing, certainly by any chance. Retailing, fashion wear retailing, most overrated sector. General retailing, most overrated sector. You saw the Reliance results. You've seen Trent. You've seen, Avenue you just spoke about. Just see their performances versus what the market valuations are. I think the most overrated sector, in my view, at this point of time, among all the sectors that I see in India. And I think if you were to look at what is really the underrated sector, nobody buys it. I do not know why. Paper. P's of 3 and 5. Incredible, even after this expansion, highly profitable companies, 3 or 4 companies run this whole market in India, and the P's are less than 5. I have not seen this. I do not know why it is so. And it has continued for year after year. It's not like it's a one-time phenomenon. I have no clue. I'm sorry to say why it is happening there, but you ask me what's the most underrated sectors, paper, PE of less than 5, highly profitable, duopoly, literally, no competition, necessary of life, but still the PE is 5. Such as market, fashion retailing gets PE of 120, essential profitable business of paper gets a PE of 5. That's market, my friend.
Oh, well, yes, that's market definitely. But for the day, at least, JK Paper is doing all right. It's 7% higher on account of the earnings. But Ajay, on that note, we let you go. Thank you so much for making time.
Thank you very
and
much.
speaking
You
with us.
have a good day.
You too. Thank you so much.